welcome to the report card. I'm Shireen Bhanas. Finance Minister Pranab Mukherjee rises to present his third budget since the UPA took over for its second tenure. We put the spotlight on the year that was, the highs and lows, the hits and misses, the successes and failures. We also bring you expectations from Budget 2010. We've got a star-studded lineup for you, so stay tuned to the report card. He knows North Block well. An economist, the former chief economic advisor to the government, a former member of the Prime Minister's Economic Advisory Council and a member of the 12th Finance Commission, Dr. Shankar Acharya understands the art of budget making. It's time for Dr. Acharya's report card. Dr. Shankar Acharya, many thanks for joining us on CNBC TV 18. Let me ask you, sir, what does it feel like to be back at North Block?
Well, we are sort of outside North Block, Shireen. So
I know, not inside, not inside yet.
But it's on a day like this, I wonder why I don't come more often.
But let me ask you, sir, how would you rate the economic performance over the last year? Because we've come off a fairly bad year. You know, growth seems to be back on track. Of course, there are worries in terms of fiscal prudence, fiscal consolidation, inflation. But on the whole, how would you rate the economic performance in the past year?
I think I'd certainly rate it better than what I expected on growth, no question. I think better than what most people expected. And I think everybody now expects it's going to be 7% or higher than that for this year, which a year ago, as you remember, nobody would have said that, or almost nobody. I think there are areas where one worries, and I think the one that's really worrying me most is inflation in the short term. The fact that food price inflation, essential commodities inflation, has really been in double digits now for over a year. It's not just 2-3 months. And I think that's a real cause for concern. I don't want to come out sounding too critical, because there was a supply shock, the drought and so on. And so, in a sense, some of this probably could not have been avoided. But
food inflation at 17%, a lot could have been done. A lot could have been done.
I think on that, you know, a couple of things which come to mind, and with the benefit of hindsight. One is, I think, right now, food stocks, for example, are really quite high. I forget the exact figure. I think it's close to 50 million tons. And the buffer stock norms are substantially lower, closer to 30 million tons. So one wonders why things like open market sales, which I recall we used to do 10-12 years ago, you know, whenever the situation got like this or near this, have not been more aggressively pursued in order to, you know, tamp down those commodities where you do have an intervention capacity. Now, I know you don't have intervention capacity in, say, fruits and vegetables. And, you know, whatever happens there happens. But in some of these commodities, I think a little more could have been done. I think it could have made a difference.
The path to fiscal consolidation, do you actually see the finance minister moving towards that this budget? He talked about wanting to move towards that in the last budget. The stimulus seems to have worked, almost 3.5% of GDP. Of course, there were question marks on whether it was enough or not, but certainly seems to put growth back on track. Do you think he's going to start a gradual withdrawal this budget?
Well, first of all, I think you're being too complimentary calling it a stimulus. I think it was more a case of, if you go back to 2008-9, most of it was good old populism, you know, things like pay commission. It just happened at the right time, and then we called it stimulus. But still, I think it was important and it helped us. So that's. I think that in terms of looking forward, if you recall, the finance minister himself, when he placed the last budget in Parliament in July, had in the accompanying medium term, whatever it's called, said that for this year, coming year, the fiscal deficit of the centre should come down to 5.5% of GDP.
That's right.
My own take on this would be that, you know, I think this coming year we have to have a little bit of fiscal consolidation. Otherwise, I think there's a serious problem with our credibility, internationally, domestically, anywhere, as well as it's going to create problems for management of the macroeconomy. If the fisc continues to be at a sort of consolidated deficit of 10-11% of GDP, then to try and expect this RBI to take care of everything somehow is just not on.
In terms of missed opportunities, we've already spoken about two areas where you think that the government could have done a much better job in terms of managing. But in terms of missed opportunities, what would you regard as the most significant?
I think this whole area of the 3G auction, I mean, it's been going on for years now. And we must be looking a bit foolish I can see that if I were in the finance ministry today advising the minister, I'd say, let's make something good out of a bad job, which is, okay, we're not going to get the revenue this year, but next year will look better because it will slip into next year. But I think that's not the right way to look at it. And the right way to look at it is, here's an area where we've been talking about going to 3G for 2-3 years at least, and we haven't yet done it, and there isn't a clear, comprehensible reason why we have not. The other area where I've been more than a little disappointed is, I think, on the whole area of petroleum pricing. We just keep setting up committees to postpone.
The third one, do you think the Kirit Parikh committee report is going to do any better than the predecessors, the Rangarajan and the Chaturvedi committee report?
I certainly hope so, Shireen. I certainly hope so.
He talked about it in the budget. He talked about a sustainable oil mechanism in the budget. We've got the Parikh committee report, but from what the signals that one is getting from the political front, it certainly doesn't look like these will be accepted at least anytime soon.
I guess I'd have to agree with you. I think I'm not completely pessimistic on this. I guess my take would be that if the general price indices, particularly the commodity food price, essential commodities indices of prices, they come down because of cyclical factors or because of measures taken in the next couple of months, then around April or so, there may be some chance that you'll see some adjustment of these controlled petroleum prices.
In terms of your expectations, what would your key expectations be from Budget 2010, Dr. Shankar Acharya?
My key expectation and hope would be that there's some little bit of fiscal consolidation from whatever the RE is shown for 2009-10. Let's, for purpose of argument, say for the centre it's 7% of GDP. Right. Then I would like to see, if not 5.5%, at least 6%. That is at least a 1% reduction.
Okay, my final question to you, given the sort of political mandate that this government actually enjoys, given the fact that bold reforms, second generation reforms are really the need of the hour, how would you rate or assess the past year, sir?
I'd say on reform measures, because reform measures essentially are dealing with the future.
That's right.
Because you're laying the basis. I think on reform measures, I'd have to say pretty low.
Okay.
On the actual economic performance, on growth and so on, pretty good.
Okay.
On inflation, very worrying.
So that's a mixed report card.
It's a mixed bag.
Okay. Many thanks, Dr. Shankar Acharya, for speaking to us today. It's been a pleasure, sir.
It's been a pleasure, Shireen.
Thank you so much.
Thank you.
How hopeful are you that we are going to see some of those bold reforms make their presence felt this time around in this budget?
I was hopeful in July 2009. So, I mean, as far as hope goes, I'm an eternal optimist and I continue to hope.